Thanks for tuning into this earnings conversation with Deepak Nitrite. They came out with the numbers a few days ago, but as is the case with almost every company which is in this space and promising prospects of better times ahead, the prices are a depiction of what the markets believe the company could do. The con call was no less different, and it's our pleasure to have in the CEO Maulik Mehta talk to us about what lies ahead. Maulik, at the onset, apologies for the loss in your family. And Aside of that, I hope all things are fine.
Thank you so much, Neeraj. And yes, things are good. It has been a loss, physical as well as emotional, but Mr. Mehta has really instilled in us the right kind of culture, the right kind of values. And we believe that this is setting Deepak up for growth in generations.
Touch wood. That's great to hear. I'm sure shareholders are pleased to hear as well, I'm sure. So, Maulik, put this into perspective. One swallow does not a summer make. Would you believe that Q1 might have been impacted by a lot of one-offs? Because I saw your margins and I was a bit surprised as to what's happened here. So, tell us what went into quarter one, and tell us what does this, I mean, what do the quarters ahead bring in store?
Sure. So, Neeraj, I agree that quarters sound like the very exciting news for the investor community, but for us in the business, decisions that are taken in one quarter can affect the profitability of a quarter, maybe 4 or 5 quarters later, a year later, sometimes 2 years later. So, to start off with, the quarter under consideration, Q1, has been unique from a couple of perspectives. One, I'll start off with internal and then I'll go external. One is in the phenolics side, we had a shutdown for about 15 days. This has been a few quarters in the making. We have ensured that the plant has run reliably, but this is the first time that we have shut down for an extended period, which is what is required for things like catalyst change and internals cleaning. And this is actually considered as normal business activity, but it did play an operational impact for about 2 to 3 weeks as the startup and safe ongoing operations commenced after that. Secondly, what we've seen is a significant volatility with regards to crude as well as benzene and propylene prices. And we took a conscious call, seeing how the prices were moving downward towards the tail end of June, to walk into quarter two with the lowest inventory finished product that we have in years. We know that it would impact our quarterly operations, but we also believe that it was healthy so that we walk into Q2 with a significant opportunity to buy feedstock at a better rate than we would have under normal operations. So on the phenolics front, those are two aspects that have played an impact internally. That said, I can also give a good degree of comfort that our debottlenecking efforts are yielding exactly the benefit that we had projected, maybe a little bit more. Certainly, it'll be more than a little bit more when it comes to the winter season, when most chemical companies are able to push more volumes. So this is on phenolics. On Deepak Nitrite, the standalone business, since we are into multiple end applications, including textiles, papers and detergents, agro, pharma, rubber chemicals, others as well, it's been a bit of a mixed bag. So there were some end applications like dyes, which have seen a malaise over the last year or so. Despite whatever happened in China, whether China was on or China was off, the demand scenario which has been expected in India has not happened to the extent which one would hope, given that we are very, very fond of festival seasons and all this. And internationally also, we have a lot of companies which service the European and the American markets when it comes to textiles. And they have had lean order books last year, partially because of things like interest rate hikes, partially because of freight costs, but also as it goes along, because there is a drop in consumer confidence, the supply chains for many of these companies have been thin. Now, that is not to say that this is a permanent situation and we are seeing green shoots, but as with anything else, because we are in the intermediate space, we get the effect in both cases from feedstock as well as from the end application, maybe a month or two or a quarter or two after. This does serve as a good lead indicator for what we should do next. And therein, what I can also share is that in the previous year, we did a lot of brownfield debottlenecking. And while doing that, while the investment and the debottlenecking may have been for X, using our own operational excellence competencies, we were able to debottleneck it at zero cost to 1.5x. So while we had contracts and we were in place for X, we were able to debottleneck it even further. And compared to that, we are running it under capacity. But as I like to put it, this is what we will call unrealized sales potential. As we see the market improving over a period of time, we will be able to address it at no cost and very, very quickly. Along with this, we have continued to see a slow situation when it comes to the paper industry. And we have seen a mixed bag when it comes to the agrochemical industry. Many of our strategic products are absolutely well and good. In a couple of agrochemical intermediates, what we have seen is customers requesting for a delay in supply, but have maintained their annual projections. And this is anyways well covered in our contractual agreements. We have fantastic relations with them. We have gained wallet shares across every single end application. And we continue to be confident that we will be long-term suppliers in these. In fact, as I mentioned in the con call, we've actually started supplying some key intermediates to China as well. And wouldn't you know it, at a margin profile which is slightly better than what we have done otherwise. This came as a surprise to us, as you can imagine as well.
Yeah, would surprise most people. Now, Maulik, since I have 5 minutes with you more, I will not get into deep diving into any of these. Maybe we'll save that for other opportunity, but I'll just get the headlines out of the way so that we get a complete sense of sorts. So would you therefore believe that as a result of all that you've said, but coupled with the fact that the Chinese economy is going through a woeful period of sorts and in a bit of an unpredictability, at least as far as the real estate as well as industrial demand goes, maybe not consumption, would you believe that you are favorably placed to take advantage of maybe lower uh, raw material costs because China will want to offload a lot more? Or would you believe that it might impact your eventual markets because China might actually offload a lot more to every part of the world?
So both of those are true.
Okay.
Both of those are true because as an intermediates manufacturer, we buy from China, we compete with China, and now we sell to China as well. So on all fronts, until the Chinese consumption pattern improves, as you would have seen, I think today or yesterday, China also announced that it is basically going into a, I wouldn't call it a recession, but it is certainly a stagflation. The country is trying to pump up its consumption expectations. Nonetheless, what I can say is that we are well positioned to be able to, we have a diversified supply base. In the quarter as well as last year, we deliberately took an additional cost on in terms of diversifying our raw material supplies, even at a higher cost, in order to ensure that we were more resilient. Now, this will continue for a couple of quarters until we become self-reliant.
Okay.
Nonetheless, it is a decision we took last year, and it has participated in all of the quarters last year as well. If I compare with the FG, I do see that there is certainly a slowdown in the rate of destocking that is taking place from Chinese companies abroad.
Okay.
And I do see that there is an increased conversation level that is there with European and American customers about de-risking from China. And this is not at a procurement level. This has now reached a board level. So it is a strategic conversation.
Okay.
And we are well placed to be able to take advantage of that.
Okay, which is good to know. So therefore, you reckon that Q2, Q3, Q4 could be materially better than what you've done in quarter 1, on the, of course, the revenue front and the offtake, but 2 also on the operational front, because 11.86% EBITDA margin is probably the lowest that we may have seen in a long time. So I believe on the call you said that you will probably do an average of 15 to 18% for the year. You do that starting, or you meant that starting quarter 2 itself, or does it happen in the second half?
So I do believe that quarter 2 is much better than quarter 1, and the numbers that I gave in terms of the guidance for EBITDA, they seem reasonably realistic in quarter 2.
Okay.
Starting, what I'm looking at right now, does that mean that as a global economy, we're out of the woods? I don't know. The chemical industry has thrown up surprises, but at the moment, it does not seem unrealistic. And I do believe that the kind of intent that we are having from our customers also in India. So I still stand with the position that I took, that we see a good uptick in the construction industry.
Mm-hmm.
I know that a lot of industry peers feel otherwise. I do see that there is an uptick when it comes to the auto industry. Some amount of this may be because of a lower demand or lower production in Europe, and that may be moving to India. But whatever it is, as intermediate suppliers, we stand to benefit if the production is in India. Now, in Deepak Phenolics, there has been a very low EBITDA. Partially, as I mentioned earlier, this has come from bookending on both sides. I don't think that 8% is a realistic medium or long-term number. I do believe that it should be better. That said, Q2 certainly will be better than Q1 in both the companies.
Got it. Fair call. And we'll take it forward, as I said, in a slightly longer conversation. There's one final question, Maulik, before we wrap up, due to paucity of time. But your capex, I was wondering, there are 2 or 3 statements, and I was just trying to get clarity for myself and our team as well, to be able to project the right thing in our stories. There's a 5,000 crore number split between 3,500 crores for phenolics and 1,500 for specialty chemicals. And in the intermediate, I saw a number of 2,500 crores from now until maybe 2025 or FY25, as the case may be. Could you just tell us how is this bifurcated? This is my last question.
Okay, so the 2,000 crores, which is what I call it, this is what we are currently in the process of executing.
Mm-hmm.
This is a mix of revenue accretive as well as bottom line accretive, 50-50. But there is also some level of infrastructure capex, which is in this. The 5,000 crore, out of that, 3,500 crore is earmarked for phenol, bisphenol, and the polycarbonate compounding facility, which is a very measly 200-300 crore. The rest of it is focused on specialty chemicals using world scale processes which are not currently practiced in the industry. Okay. And this is juxtaposed with what I have also mentioned about an entry into value added life science products, which will be contractual in nature to the most part. So they would have margin profile similar to Deepak Nitrite.
Okay, and this is, sorry to interrupt, but this is beyond the 2,000 crore current ongoing capex. There's an additional 5,000 crore capex, which I believe start maybe post FY24, somewhere in mid FY25 or thereabouts.
You won't hold me to a couple of 100 crores here,
no,
right?
Yeah, of course. No. Mota-moti. Okay, perfect. Thank you, and all the best for all of this. I know we have to let you go right now, but look forward to a slightly extended conversation at some point of time later in the year.